exploring the investment landscape with a guru's wisdom and a strategist's insight. Good Life Companies presents The Market Enthusiast with Noah Brooks and Chris Needs.
Welcome back to another installment of The Market Enthusiast. I'm Noah Brooks. With me is Chris Needs. So we were here 2 weeks ago. Anything happened in the last 2 weeks?
Got a little bit of a growth scare, I guess. If you look back a couple weeks, we had a jobs report that was off the recent trend, we'll say 114,000 jobs. And then we pair that with a Japanese yen carry trade blowing up kind of. You had Buffett selling. He took his cash reserves up to 277 billion. So a couple of things that spooked the market a little bit, spiked volatility.
Yeah, a little market meltdown on Monday last week, huh?
A little bit of a scare.
Yeah.
We got a little adrenaline going.
Okay.
Looking back to that morning.
But so here's the interesting thing. Market was down. I took a snapshot of my screen. Dow was down over 1,000 points. S&P was down 5%.
NASDAQ was down, I know, 5.5%-ish at the open.
Yeah. It was pretty rough. But here we are 2 weeks later, and we're actually higher than we were the last time we recorded this.
Mm-hmm.
Almost like nothing happened. It's a little bit weird.
Well, I mean, last week when we had all the volatility, we started off awful on Monday, but the S&P 500 was down, 2 basis points on the week?
Yeah,
so
less than 1%. I think it was
all back.
Like a quarter. It was kind of a nothing burger.
Yeah.
So you mentioned the yen carry trade. I want to bring that up to all our listeners because they just float that around on the news. Tell us exactly what a carry trade is, and specifically for the Japanese market, so we can so everybody knows.
So a carry trade is just where you basically borrow in a very low interest rate currency, so you have a low interest rate to pay back, and then you take those assets that you got from the loan and you put into another security. Most often it's done with another currency that's a higher yielding currency, but it could go into any security basically. Yeah. And the Japanese yen is historically, in recent history, been very low yielding in terms of interest rates on zero basically. So many investors loaded up on that carry trade, and they would, instead of borrowing at 5% US dollar, they'd borrow in yen and then buy something else with it.
Yeah.
Just a little arbitrage, but that gets blown up when the yen strengthens and appreciates pretty drastically like it did last week.
Yeah. So two Fridays ago, the jobs report came out, and it wasn't great. It wasn't horrible. It wasn't great. 114,000 jobs. And then that night, as I was, messing around in the evening, the Japanese market was down dramatically.
Mm-hmm.
I think it wound up being down like 6 or 7% on that Friday. And then on Monday, we came in, and overnight the market had been down. I think it closed down 12.5%.
Mm-hmm.
I went back. It had its high the same day as the NASDAQ, all-time high. For the Nikkei was 42,000, something like that. And then in a matter of from July 16th through August 5th, it was down 25%.
Mm-hmm.
So it went through correction into depression territory there a little bit.
Yeah. The yen was trading in the area of 170 to the US dollar. And then on that Monday, it had fallen to, I think it was like 142.
Yeah.
Which really blew up those trades. And there was more fear in the market that it was something more systemic, like maybe some of these very leveraged investors were in other markets and they didn't know initially how far it would go.
Yeah.
But a couple days later, we saw the unwind was done, and volatility faded back. We saw the VIX spike to 66 on that Monday, but by the end of the day, it had fallen back to like the 38 range.
So this is the thing with the VIX, and most people know the volatility index. It's something that is an indicator of volatility. It tracks the difference between short-term options and longer-term options on the S&P 500. It spiked to levels that we haven't seen since COVID and since the global financial crisis.
All on a 25 basis point hike by Japan and a jobs report.
It doesn't seem like that's a great indicator if its measurement was the same as the global financial crisis or COVID, over nothing.
A real no emergency scenario.
Yeah, that's kind of. I think we should keep that in mind as we continue to talk about the VIX over the next 5 years. Just remember that one time where it was completely out of whack.
Yeah.
So I mentioned that the market is actually higher than the last time we were in here recording 2 weeks ago. Year to date, S&P 500 up a little over 16%. Great returns for the year. Mid caps up 8.5. Small caps, that rotation that we were talking about 2 weeks ago, still in play. It just it hasn't worked out so well.
It lost its juice when we ran into that volatility spike a little bit.
So I mean, today small caps are up. I mean, the market's up pretty dramatically today overall. Small caps are up 6% for the year. So for the quarter, we have growth that's actually down a little bit, and value up 425. So there is the rotation that's happening. Small caps are still down for the quarter. It's going to be one of these things that I personally think small caps will continue to rally as we get closer to that Fed meeting in September. What do you think they're going to do in September?
I think we're going to get 25 basis points, and then they'll maybe wait till November or December for maybe another 25 basis points, assuming things don't change drastically in that time. I was happy to see they didn't give in to the market on that Monday or Tuesday and do something emergency.
Well, people were calling necessary. They need to, if you're watching CNBC or Bloomberg, people are calling for an emergency rate cut. It just doesn't make any sense. I mean, the Fed's been out there waiting on the data for 2 years, and now we're actually starting to get the data that's required, and then people are pounding the table on an emergency. And
it was a Monday morning quarterback scenario for sure.
It was Monday morning.
Yep.
Yeah. It's one of those things where, sometimes bad news is not that bad. In some cases, it can be good news. So if the Fed is lowering, that's good news. But if the Fed lowers from an emergency standpoint, that means that the economy is so bad, they have to do this emergency lower, which is really bad. Yeah, that's not good news that they're lowering under those circumstances. So it's under the lens in which they make that move that really plays into how the market responds to it.
Yeah. And we've seen sort of a change in reaction to economic data where, prior to it was like bad news was cheered on because it pulled forward rate cuts. Mm-hmm. And it seems like, again, bad news is bad news and good news is good news. So we saw the market rally strongly on last Thursday when we got the initial claims that sort of indicated people weren't losing their jobs. So maybe that unemployment going up to 4.3 was because the denominator, the number of people potentially to be employed, was growing rather than the denominator falling down.
Yeah. So it's not an issue of a lack of demand. It's an issue of more supply.
Exactly.
And that's how you can continue to have job growth while the unemployment rate actually goes up.
Right.
And I guess you could make a case that the unemployment rate going up is good, because it will force labor rates down. Right. That wage inflation that we've been seeing for years. Now, it depends on which side of the coin you're on. If you're just coming into the job market, you want to see that wage inflation go up. But that means inflation in general is going up, so probably not. But the Federal Reserve is looking to see wage inflation relatively low. They're looking to see inflation numbers come down. We know that they want to see it too. There was a report out yesterday. CPI. What did it start with?
We got 2.9.
Got it too. First one since March of 2021. Right? I mean, that's big time.
After a good PPI report as well, largely in line, but that's what we want at this point. We don't want a drastic fall in CPI or drastic fall in PPI because that would insinuate there's some sort of demand destruction, which, as we just mentioned, it's not a demand issue we're dealing with. We're just getting a little bit more supply. So
I have like a parking lot indicator. I don't know if you have any of those indicators, but here in where I live, I always think to myself, during the global financial crisis, I would go into the major shopping center area, and like the Target and the Walmart and all those places. And at that time, you'd go in on a Saturday afternoon and there was very few cars there, right? And it really took a fair amount of time to actually see people coming back and shopping. And I just, this is kind of my daily habit. I go in, I look around, the parking lots are full.
Yeah.
I mean, there's no question about it. That's obviously anecdotal, something that I look at. But
That's like a Jim Cramer thing back in the day. He said he would go out to like Philadelphia Mills, was it called, up in the Northeast? And he'd look at, the traffic in the store and just say, this is where the consumer's at, or how retail strength is. And we got a good retail number today.
Yeah.
As well. So it was up 1% versus, I think it was only 0.3% expected. And, it's nice to see the consumer hanging in there. And again, just reiterates, we're not looking at an economic crash scenario. Just a slow and steady slowdown would be kind of what the Fed's goal was and what we're looking for at this point when we're looking at the data.
So you said a slowdown. I just want to add to that a little bit. We for all intents and purposes, we were locked up in 2020. We were locked up in 21. For myself and my wife, we didn't really start doing anything until 2022, late 2022, as a matter of fact. And then I heard this term coined at some point last year, revenge spending. And I was locked up for all that time. Let's go here. Let's do this. Let's buy that. And I would say that I'm probably guilty of it.
And a little bit of treat yourself in
there.
A
little bit of treat yourself, right? It's like a spa day sometimes. Only
spending.
Are you revenging yourself? I don't get that part. But no, you're making up for lost time, right? Trying to pack in things that you didn't do over that time period. And I would tell you that I think a lot of people participated in that. I certainly know we did. I would imagine you did as well. And my position on this slowdown is that it's less of an economic slowdown and more of a return to normalcy of spending. And so I think we are going to see some type of slowdown, but it's not the same thing as, certainly not a recessionary type of scenario. I mean, anything could change, but we're not in that position where the housing market is about to crack. We went through a time period in the global financial crisis where we were giving out mortgages to, landscapers making $30,000 a year could buy an $800,000 house. That's not happening. The mortgage market is in good shape. In fact, mortgage rates are coming down in anticipation of the Federal Reserve lowering rates. I had a note here. We were at 4.75 on the 10-year earlier this year. I think it was mid-April, 4.75. Today we're at 3.8, well under 4% on the 10-year. And mortgage rates are just coming down. I don't want to say dramatically, but they're coming down. That's going to really be helpful. There was an article this weekend about people refining already from their stuff 6 months ago or 8 months ago. It's kind of nutty.
People were chomping the bit. I'm sure a lot of realtors out there were telling them, oh, don't worry about this high mortgage rate. You'll be able to refi shortly. So everybody's been chomping at the bit, sort of keeping an eye on the rates. And I don't know what the trade-off is, but maybe when you're 1.5% down from the highs, it becomes a good financial decision refi, because there's costs associated, obviously, when you refi. But
yeah. Well, so rates coming down, bad for money market mutual funds, good for bonds, right? So the bond index is actually up. I mean, we had 3 back-to-back years of negative returns in the bond market. And here we are, bond index up a little over 2.75% as we stand right now. I mean, it's not great, but it's certainly not down for the year. So I think, and what we saw the other day with on Monday when the market was down, bonds were up. You know, so there.
And we briefly saw that intraday uninversion of the 2s and 10s, which has since gone back. We closed the day still inverted, but we're getting there. I think it was 11 basis points when we're looking at this morning. So
yeah,
we are very close to breaking that record inversion.
Yeah, absolutely. So speaking of records, I saw this. It's a little bit morbid. It's a list of top 10 causes of death in the United States last year, and it just came out. COVID, which is why I say it's why what makes me think of it, but COVID was number 10 on the list, down from number 4 last year. And I don't know if you know anybody with COVID right now, but I actually know a few people. It seems like it's coming back a little bit. Number 1 on that list of killers for 2022, heart disease, 22% of all deaths, almost 700,000 people.
The normal leader, right? is heart disease.
Yeah,
generally.
Second, cancer, like all sorts of cancers. So those are both 20% or more, and then it drops down to accidents or unintentional injuries at 7.5%. On there, you have strokes, COPD, Alzheimer's, diabetes, kidney disease, liver disease, and then COVID. It is wonderful. This is kind of weird. Wonderful to see COVID coming off, and I guess the normal stuff going back.
Yeah.
You know, I don't want to deal with that again. But there are some people that I know. There are some people out there. So
It's hanging around.
yeah, are you gonna?
It's trying to stay relevant.
It's trying to stay relevant. I hope it doesn't.
Yeah.
I hope it doesn't. What else do we have? Economic speaking, or anything?
Well, we could follow up with we were talking, sort of joking around about what was the biggest eBay items out there.
Last time,
yeah. So in history, the purchases, there was a Giga yacht that was apparent, again, had no business being on eBay is how I look at it, but 168 million.
That was the largest purchase ever on eBay?
Yep.
Okay.
There was a Gulfstream 2 jet that was 4.9 million. Huge disparity there.
Yeah.
Again, two things that I don't think should be on eBay, but you know, I guess it's where they wanted to make their stand and sell it. And
was it the founders of eBay? And we know who they are, right?
Yeah, but I don't know who were the sellers.
Yeah,
that would make sense though, someone associated. And then third was an interesting one: lunch with Warren Buffett at 2.6 million.
Would you pay 2.6 million for lunch with Warren Buffett?
I don't have 2.6 million.
Oh, great. Yeah. Got it.
But no, I probably wouldn't.
Yeah.
I could just read the thousands of books about him. I'd be good with that.
Okay. I mean, I wouldn't mind talking to him if I didn't have to give him 2.6 million.
Buy a share of Berkshire and try and meet him in Omaha.
Yeah. Okay. Let's touch on inflation a little bit. We just said that it came down to 2.9. That was the headline number. Core inflation just a little bit higher at 3.2, but it does seem like we're moving in the right direction. Certainly around here in our neck of the woods, gas is continuing to come down. There are some things that are going up a little bit, right?
Yeah, of course there is. I mean, we still have insurance that's hanging around higher than normal. I'm sure with hurricane season, that won't help. Obviously, that's not car insurance, but you'll probably see, home insurance. Everybody's heard about Florida and how tough it is to get insurance down there. There's still pieces that are going up, but it's certainly not like last year, or especially 2 years ago.
I was talking to one of our advisors at a conference this past weekend, and they were telling me their parents have a place, Coral Gables, that they paid something like $350,000 for maybe 10 years ago, and I guess they paid off the note maybe 15 years ago. But their home insurance is like $2,500 a month. Their hurricane insurance, flood insurance, things like that. That's kind of nutty.
Yeah, that's difference making right there for
difference
sure.
Making.
Yeah.
Anything else notable?
We had the DOJ coming down on Google.
Yeah.
I thought that was interesting. First real antitrust case. Google was apparently monopolizing or doing unfair practices with Google search, with exclusivity deals and buying spots on, for example, like phones and things like that, browsers. And they basically lost that court case. I think it actually concluded in May, but they're weighing basically what they're going to penalize them with, which could potentially be breaking them up. Now, we had Microsoft back in 98 sort of lose.
Sure.
But then on appeal, they sort of won on appeal, and basically a lot of the penalties or repercussions were mitigated. And then before that, you have to go back to the 80s with AT&T when
Mount Bell was broken up. Yeah. But, Microsoft was accused, and it seemed like they were proven to do some of the same exact things with the exclusive deals that Google's doing. It's just it was on the computer and instead of the phone.
Yeah.
But I mean, you think about search engines. I know that there's people like, I use DuckDuckGo because they don't sell my stuff. Like I've heard that. We know someone in here that does that. But imagine trying to start a company, a search engine company today. How there'd be no way to do it.
Mm-hmm.
Even if you had a lot of money, there would be no way to do it. You would get zero traction. You would have no computer retailers, no phone retailers that would put you in there as a default.
There has to be a way to differentiate from the existing, and that's so difficult with the cash outlay that would need to be done. But, you know, the closest thing you think of maybe like an OpenAI would be slightly different than a normal search that could affect Google. And obviously Google was affected by that when OpenAI came out. I thought it was interesting you mentioned DuckDuckGo. Their CEO was actually testified. He was called to testify about, and he said, no, don't break them up. Just prevent these exclusivity deals. And I thought that was pretty interesting. You know, you just call up their competitors to come testify against you or weigh in on it.
Who else are you going to call?
Yeah.
Right. Speaking of CEOs, what CEO news do we have this past week, right? Starbucks?
Yeah, that was big news. Starbucks poached Chipotle's CEO, Brian Niccol. And basically he got a massive deal to go to Starbucks. It moved Starbucks stock drastically.
Like
they
25%.
were up, and then on the other side of things, Chipotle got hit on it. They got down to, I think, at most like maybe 13% intraday before coming back a little bit. But definitely big news. He gets to stay in his home in California. He's not required to be on location in Seattle. He got a good little gig, good pay package. Hopefully he'll start a turnaround story with them and maybe get their online going correctly, because they've had struggles with their online and their app. And it was a big move, though, for sure. It was a big win for Starbucks. Apparently Howard Schultz was happy with it. And
well, so we should delve in. What's the gentleman who he is replacing?
I don't know the name off the top of my head, but he had a rough little stint.
Yeah, he was kind of famous for saying that he stopped work at 6 o'clock at night, and it would have to be somebody really, really important for him to answer the phone.
Yeah.
And you're like, as the CEO of a Fortune 100 company, you're going to stop work at 6 o'clock tonight or 6 o'clock?
Funny thing with a stock like that, the market immediately weighed in, and it's like, this is what they thought of you, and this is what they think of the new guy.
Yeah.
Tough.
That would be tough on my psyche.
Yeah.
But I mean, he kind of did it to himself. I don't know where everything goes, especially Starbucks, because it seems like they've had the market cornered on coffee, you know, for forever, essentially.
Mm-hmm.
And now you're starting to see a lot of other franchises pop up. And I've tried a number of them. I'm not a giant coffee drinker, but I've tried a number of them. And there's some other, and there's a Dunkin' Donuts everywhere you look.
Yeah.
Right. But like around here, we have
Seven Brew.
Yeah. And it's pretty good.
Mm-hmm.
I like
they
their
have
iced
Dutch
coffee.
Bros out on the West Coast.
Dutch Brothers, right? Yeah. I mean, so I don't know how, you know, you have that moat around you because it's Starbucks. And then after a while, it's just like, well, okay, there's lots of other coffee places.
I mean, there's a number of things we talk about, inflation and everything. You know, I got a large latte, and my wife got a medium iced coffee, and it came out to $15 at Starbucks. I'm like, you know, it does pack a little extra punch. I don't know if it's worth $15. I could get like 3 coffees and 2 sandwiches at Dunkin' Donuts for that same price.
Yeah. I've been on their Starbucks cold brew in a can.
Oh, yeah.
And I found that you can order them by the 12-pack on Amazon, 8-pack on Amazon, and they're only like $2.65 a piece. Instead of at the store, they're like $4.50 a piece.
Yeah.
So, yeah, I ordered 2 cases the other day.
Speaking of CEOs, Boeing found a new CEO, Kelly Ortberg. He was at Rockwell, and he had overseen a number of transitions, and then ultimately, I guess Rockwell got bought out by Raytheon, and that's when he sort of stepped away. But he got tapped for the Boeing role to sort of lead their turnaround. NASA actually hit Boeing with another thing, saying they're opening an inquiry into their space launch system. So,
well, how about these astronauts?
Just continues. They're stuck up there. Yeah.
So they were supposed to be up for like 2 weeks, and now it could be a year. I mean, you prepare yourself for something like, hey, I'm going to go to summer camp. It's, you know, going into space for 2 weeks. And then all of a sudden, hey,
you're going to stay a little longer.
A little bit longer. And now it's not until March of 2025.
Yeah.
That's nutty. I couldn't imagine. And how would they have the provisions for that?
They're going to have to stretch them. You ever watch The Martian, where he's
Martian,
like
he's
booking out like 1/4 of a potato, and like that's what I imagine's going on up there. The female astronaut, I apologize, I don't have her name, but like they showed her talking, and like I feel like it was representative of where her mind's probably at, because her hair was just like all crazy.
What are you gonna do?
Yeah,
You can't take a shower, can you? Inquiring minds want to know.
Yeah.
We'll come back to that one. Now, we were talking about Microsoft a little bit earlier, and famously, Microsoft's in most operating systems except Apple. I mean, I guess there's some people out there using a few different things, but the majority of people are using a Microsoft platform. There's another large majority. I guess that's not another. There's another group of people that are using Apple's, but one way or the other, you're going to touch those two products. August 12th, earlier this week, it was the 43rd anniversary of IBM bringing out the PC, the first PC. So that was August 12th of 81. They did that 43 years ago. And, we've already gone through the PC. I mean, everybody in a firm has a PC. Everybody out there listening to this has a PC or a laptop. But now we're in a situation where we're just moving to larger phones.
Yeah.
Right. I went back. I looked at IBM since that time period, since August 12th of 81, and their stock, and not, there's not too many companies out there. There's certainly some that have been around that long. But IBM since then is up 2,450%. I looked at Microsoft over that same time period. Now they weren't out in 81. They came public in March of 86. But from that time period, they're up 650,000% versus the 2,400% from IBM. And you think about Blockbuster and Netflix, right? Blockbuster could have been Netflix. JCPenney could have been Amazon. When I was a kid, we would go to the
IBM didn't evolve.
They didn't evolve. We would go to the not warehouse. The JCPenney had a catalog outlet that you'd buy stuff on the catalog, and then they would come in and they'd call you and say it's here, and you'd go to town and you get it. Had they just worked on that a little bit, they could have been Amazon.
Yeah.
Right. All right.
Got to be a visionary. Got to make those changes. Got to look at your processes and update them. I think Bill Gates had a process of like every year or 2 years, you need to review. Every 2 years, you do a hard review. And in 3 years, if it hasn't changed, you need to get rid of it. Basically, do something better.
Well, I guess we're always looking for the next Microsoft and not IBM. Although recently IBM's done pretty well, over the last year or two. But historically, it has not been a great performer, especially not over that time period. But maybe they're looking to reinvent themselves. Yeah. All right. So we know a rate cut is coming. We think it's in September. I would be surprised if it's not, but I guess there's a chance. If you've been listening to this, I said 6 months ago, I didn't think it was going to be until after the election. There's an election coming up. I didn't think it was going to be until after the election. Now it looks like it is going to be. Right. And there's a debate about whether it's going to be 25 or 50. I don't know that it really matters. It's telegraphing that the rate cut cycle is coming. I think that's the point that's important. Market is ready for it. I think, if we do get 50, it might be a good week in the market, good move there. I think if we get 25, it'll start that cycle, and they'll continue to lower. Especially
I'm sure with Jackson Hole coming up next week, I'm sure Powell's going to lay the groundwork and sort of give us an insight what to expect. So we'll keep an eye and gauge whether he's edging towards 50 or 25 in September.
Yeah, awesome. All right, everybody. Thank you so much for tuning in. As always, I'm Noah Brooks, and with me is Chris Needs. Questions, comments, thoughts, anything you want us to take a look at, send your emails to Market Enthusiast at goodlifefa.com. Until next time, don't bet against America, anybody.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.